Oh, there you go. And we are live, as I say. So, welcome to the Traders Blueprint class, first week. What you see on the screen here is a representation of the candles that are going to be used in the market. The market moves according to price, and these candles will give you exactly where the price is at, give you indications on where the price is going. And once you learn how these candlesticks operate, it allows you to be able to make better decisions in the market. Right. So what you see on your screen here is a green candle and a red candle. The green candle represents a bullish candle. The red candle represents a bearish candle. On each side of both of these candles, what you see are what we call wicks, right? So if you're lighting a candle at home in your house, you probably only got one wick on one side with a body of a candle. So just think of it that way. And the market is going to have a wick on each side. Okay. Now, the body of the candle is important because that represents where the price is opened at and where the price is going to close at inside of the body of the candle. The wicks represent the highest price of that particular time frame within that candle and the lowest price within the particular time frame of that candle. And it's going to be the same for bullish and bearish when it comes to the wicks. However, the body works in a little bit different. They're going to work in the opposite. So if the market is going up, that means that the price opened up low and then it closed high. And that lets us know that it's a bullish candle. And then the green color is going to represent the fact that it is a bullish candle. Now, on the opposite side, you have the bearish candle. That means the price opened up high and then closed low, right? And this candlestick is red. However, on my screen, when I'm going to show you the live market, the bearish candles are going to be white. You're going to find out in this class as you learn the psychology that red can make you kind of think certain different ways and do certain different things subconsciously. And so the less red you have on your screen is usually the better. And I've learned that once I start taking the red off my screen, I really don't want to see it at all when I'm trading. And so even my trend lines and all of that, I don't have those red either. And it's psychologically, it helps to make you a better trader. And that's why navigating these screens is going to be important. So you could be able to customize it to your uh trading success, you know. But getting back to these candles, each one of these candles, when we get into the actual market, is going to represent also a different point in time. So you can have a 1 minute candle, a 5 minute candle, 10 minute candle, 15 minute candle, 30 minute candle, 2 hour candle. You can have a candle for a particular one whole day. But that does not change the functionality of the candle. It just changed the amount of time that that candle represents. Okay. And I'm going to show you that when we get into the charts. I'm going to show you on the 1 minute chart and I'm going to correlate it to the five and so on so that you can see how the market is actually moving on these particular candles. Okay. So once again, green is bullish. In this particular example, red is bearish. Bulls mean the price is going up and the bears mean the price is going down. I'm going to stop this screen share. All right. And I am going to give me 1 second. Let me extract it out. All right. Now, what you're seeing here is what we call candlestick patterns. So as each candle forms on your particular ticker or stock that you're watching, it's going to be one after another, and they're going to slowly form. And eventually you're going to be able to see patterns that form out of these candles. Now, once these candles start to form formations, they run certain particular patterns all the time that can be identified based on the shape of a particular candle. So an example of that is this first formation right here. And as you can see, they have the particular candle that we're going to be talking about is outlined with these yellow dots. So we're talking about this green candle specifically right now, which is called the hammer. And the hammer represents a bullish move. As we can see, the body of this candle is all the way up. There is no wick at the top, or if there was a wick, it'll be very, very small. And then we got this big old long, stupid wick coming down from the bottom. And I call it the Thor's hammer. You know, it just looked like a big old hammer. And that's indicating that the price opened up here. At some point, the sellers pushed the price all the way down. And then the bulls came back in, the buyers came back in, pushed the price all the way back up, and it ended up closing higher than where it opened. So it opened here, it closed here, but at some point during this time, the price got pushed all the way down, and then it came back up and it closed higher. Now, in this particular pattern set, what you will see is that this next candle is going up. And you see that these candles, although this is a bearish candle next to it, none of them cross this level. And so the idea of it is if you're in the market and you see this particular formation of a candle, it should indicate to you mentally that it's a higher probability that the market is probably going to go up. Not a guarantee that it's going to go up, just a higher probability. And this other information that's going to be surrounding that to be able to give you the true direction of where the market is going. For every bullish candlestick pattern, there's an opposite bearish candlestick pattern. So if this was flipped upside down and it was red, then that would be, I call it the reverse Thor's hammer, but it would do the exact same function. Okay. Which once you do your homework and go into the chat, grab that link out of that chat, save it somewhere so that you can go back and be able to watch that video as many times as you want on your own leisure. Now, of course, all of this stuff is going to sound like it seems boring because that's what trading is. It's technically boring. You sit down and you wait for certain patterns to happen. You wait for certain indicators to happen. And once you've gotten into a good rhythm of being able to see things, then that's when trading comes easier to you. Uh, let me get into this. Hold on. Okay. All right. Yeah. Because I think it's important for me to show you all this now. Now that we're on candlesticks. All right. Can everybody see my screen? Put a yes in the chat if you can see what's going on here. Or come take yourself off of mute and say, yeah, you see it.
Yeah, I can see your screen.
All right.
Yes.
All right. Good, good, good. Okay. Let me clear out all of this here. And I'm going to eventually teach y'all step by step everything that I'm clicking and everything that I'm doing right now. But for the sake of what I got going on, what I'm doing is I'm taking this down to the 1 minute chart. The 1 minute chart. And I'm actually, let me put myself on demand so y'all can actually see this market move. Okay. I'm going to take the date and put it to what's this, August? We're in September. Let's go to the beginning of the week at 9:30 in the morning. And I'm going to teach you guys how to do all of this. All right. I don't like the way this screen looking. Hold on. Let me. Okay. All right. So all right, that's better. I like it. Okay. This is the 1 minute chart. And as you can see, let me see if it look better now if I do it on the screen. Yep, I like it like this. Okay. Now, as you can see, this candle opened up. You see how it's moving, changing colors and wiggling all around? This is all going on within 1 minute. And this candle is going to change shapes, change forms, and it's going to eventually close. So right now you see where it opened up at, and you see it's getting pushed up by the buyers. And you see that wick, it's getting pushed up, then it's coming down, it's getting pushed up, then it's coming down, it's getting pushed up, then it's coming down. And that's how many people are jumping in there trying to get on this particular trade, right? And then you see it come down, it's pushing all the way down, it's pushing all the way down, and we don't know what's going to happen next, right? We are looking at this candle, and I'm just showing you how it opens. You're gonna see how it closes. And I'm showing you this on a 1 minute chart so that you can see it move faster. Now you see what happened there? You see how it went all the way up and it was green that whole time? Then right before the candle closed, it went down lower to where it opened at and closed here, right? And then this next candle opened up here, right? And it's dropping all the way down. And so the sellers have taken control of this market, right? And they have pushed this price all the way down from here and all the way down there. This candle is moving so fast because we are on the 1 minute chart, right? If we switch this over to 5 minutes, शुक्र करे मैं गई नहीं तो आपको साफ करने पड़ी इतनी गंदी पोटी है. You will see that it's just only one candle moving. When we switch it back over to the 1 minute, let me do it like this. Let me do it like this. I think now is the time for me to show you like this. And what I'm doing is I took off all my original settings because I'm opening up a new window, but let me not do it like that. I'll do it a different way another time. You can see the 5 minute, right? This is a 5 minute candle. Within that 5 minutes, go back down to 1 minute, and that's all the movement that's inside of that 5 minute candle. Okay. So we got one, two, three candles, right? These candles represent 1 minute apiece. And as you can see, the price is moving with the candle. Once this candle closes, the next one opens up. This candle is still showing bearish momentum, right? You see how it kind of jumped up a little bit and changing colors. When it turns this blue color, that's a doji. We're going to get into what a doji is as well. But right now, I just want y'all to actually see what this market is doing and how it's moving. Let me take off. Let me take off these EMAs so y'all don't get confused and start asking questions about what those lines are. Hold on. I'll leave the RSI up. That don't matter. So now this is just a clear screen. This gray side here represents what we call the pre-market. Okay. I'm going to show you guys how to put the pre-market on and off as we continue with this class. But for now, I just want y'all to watch these candles. See how they are moving. We are still on the 1 minute chart. Okay. So we have this is 1 minute of movement. This is another minute of movement. This is another minute of movement. And this is another 1 minute of movement. Okay. So we got 1, 2, 3, 4. And this working on the 5th minute. Right. So when we switch this back over to the 5 minute chart, we will see that it's actually only one candle here. So this white candle here represents 5 minutes of time. Okay. And as you can see it moving lower and lower and lower. and you see where the price is going lower and lower. The bodies and the wicks on these cameras are all represented inside of this 1 minute, each one of these 1 minute charts, 1 minute candles, excuse me. So when the price came up, you see it on the 5 minute chart, it went up to a particular price. Hold on, let me get this together. On the 5 minute chart, it came up here and it came down here and it closed. And all of this is the body on the 5 minute chart. And when I switch back over to the 5 minute, you will see that there will be another candle that's going to look green that's going to be forming, right? Based on these green candles that's on the 1 minute chart. So we're going to switch back to the 5 minute. And look, voila, there go that green candle that I promised y'all on that one. So each one of these time frames represents that. Now, this is the 5 minute chart. Watch when I switch to the 10. Those two candles are now one candle. That's representing 10 minutes of time that's still going on right now. When I switch it back to the 5 minute chart, once again, it becomes two candles. Okay. And when I go down to the 1 minute chart, now we have 1, 2, 3, 4, 5, 6, 7 candles. Okay. All right. I'm gonna stop my screen share for a second. I'm gonna ask, do anybody have any questions? No questions so far. Tamara, what you think? Come off of mute, talk to me.
So far, I like it. I understand the content and the candles and stuff like that. So it's appreciated how you're walking everybody through.
Okay. So once y'all get into the actual market, we usually, in general, trade the 5 minute candles, right? As day traders, you find a specific time frame that you're going to trade, and that time frame for us is the 5 minute candle chart. We use the 5 minute chart because one, it's easier to see the patterns and it's based on real time information and that's happening right now. So if you want to be in and out and done trading, and let's just say 9:30 in the morning, you want to be done trading by 10:30 and you get your move, you won't be able to get that move
मैं
if you're looking at
मीटिंग का मीटिंग
daily.
में हूँ मीटिंग में हूँ ये कुछ ट्रेडिंग के
You won't be able to get that move if you're looking at a time frame that's higher than what you're doing. It's no way that you can get a move on a 5 minute candle if you're looking at a 2 hour candle. So you have to know which time frame you're specifically looking at so that you can be able to have the optimal opportunity to get in and make your moves, you know? And honestly, when I first started off, you end up doing silly shit, you know what I'm saying? Having it on the 15-minute chart or the 30-minute chart. Why is it not moving? You got it on the wrong time frame. Or you might be like, damn, it looked like the market is moving too fast. Maybe you got it on the 1 minute chart. So being able to identify and understand which time frame you are trading on is very, very important. I remember one time I ended up getting in on a candle on the 1 minute chart, and but I'm thinking that it's the 5 minute chart, and it was just so much confusion. And I'm like, why did I lose this trade? Well, because I'm trading on the wrong time frame. So you have to make sure and ensure that whatever time frame you're trading on is locked in and be sure. So that's just one of the things in the to be able to check. Now we're all going to set you up thinkorswim accounts. We're all going to set you up Top Step X accounts, and we're going to show you how to navigate those platforms specifically. But like I say, as of right now, I just want y'all to understand the actual candlestick knowledge. Okay. Give me 1 second here. Let me uh pull up something. Give me 1 second. All right. Give me 1 second. All right. So what you're looking at here, which I hope everybody downloaded this from the store. These are the top 20 candlestick patterns in day trading. And this is a beginner's visual guide. As I say, get the link from the chat on the particular candlestick Bible video. Watch that video a couple of times and make sure you go back and review it through your trading career. Don't just sit in and put it away. It might be 6 months from now. Let me just put on the candlestick Bible and just review it because the repetition is going to make you stronger. This is a game of repetition and patience here. And so you're going to have to get used to doing the same things over and over, looking at the same things over and over. And that's going to what's going to eventually get you to be able to process faster and be able to make more confident moves in the market. So candlestick patterns are visual price movement signals formed by open, high, low, and closed prices. Excuse me. They help traders identify market sentiment shifts, reversals, continuations, and indecision. These patterns are essential for spotting entry and exit points in day trading, especially for beginners looking to understand the market psychology. All right. So, the understanding the candlestick basics. You say before diving into specific patterns, it's important to understand what candlesticks represent. Each candlestick shows 4 price points during a specific time period. We already went over the open, which is the price at which trading began during that period. The high, the highest price reached during that period, which that is the wick. The lowest price reached during that period, which is the wick, and the close, the final price when trading ended for that period, which is the top or bottom of that stick. It say the body of the candlestick represents the range between open and closed prices. The wicks or shadows show the high and low extremes. Typically, bullish candles, price closed higher than in the open, are colored green or white, while bearish candles, price are closed lower than expected are colored in red or black. So when you get to change your colors, you change them how you want to change them. As I say, mine is, as you was seen previously, was green for up and white for down. You will have the ability to change them whatever colors you want, purple, blue, however, as long as you know what you're looking at is the key. This is going to be, you're going to customize your own shit here. All right. And so the candlestick patterns can be bullish or bearish sentiment depending on their shape, size, and portion within the broader market. And this is just a little cool visual example that they got right here, right? The hammer and the inverted hammer, right? They didn't give good screenshots of this. I'm gonna go back into this actual presentation and I'm gonna paste over the actual candlestick patterns that go for each one. It generated what it wanted to generate, but I'm going to go through and I'm going to redo it. And so once I get it redone, I'm gonna ask everybody to upload it from the store so that you can have the revised version. I just didn't get a chance to revise everything and do everything how I wanted to these past couple weeks. As you guys know, my son ended up fracturing his leg and just had a whole bunch of madness in different type of ways going on. But I did not let me stop that from teaching y'all this shit. I want y'all to know that. So what I was showing you previously, the hammer and the inverted hammer. Hold on 1 second. Where was that? Let me pull out this here. Right. So in general, right, when it comes to candlestick psychology, if you have a candle without any wicks on it, and that is a strong body, no wicks. In this particular instance, this candle is red, so that would mean the sellers have control of this candle, right? If it was green, that would mean the buyers have control of it. right? A strong body with small wicks means the sellers are still in control. The candle is red, the sellers are in control. Small wicks on each side. Sellers are still in control. The small body with a strong downside wick, the sellers are losing control, right? And so this is a part of that hammer that I was telling y'all about. Remember, I told you that hammer could sometimes still have a small wick on the top of it, but that does not mean that it's still not a hammer. So this long wick represents that the price still got pushed up. And so in a lot of cases, even though this candle is showing red, the psychology of it as a trader, you're still kind of looking at this as a bullish candle, even though this is red. I want y'all to keep that in mind, right? So when you see it come like this, even though it's still red, look out for the next candles that's surrounding it because this may still be an indication that the bulls are taking over, even though this candle is still red. That's and like I said, this real long ass stupid wick, that gives you that indication, right? And then on the opposite side of that, you got a small body, strong upper side wick. The sellers are gaining control. Okay. And so that means the price went all the way up here. It still got pushed all the way down by the sellers, and it's all the way down here. And so because this candle is still red, and we know that this is still a bearish move here, and that is how these candlesticks and candles uh move. Okay. And so characteristics of a hammer: small body at the top, long lower wick, at least twice the size of the twice the body length. Signal: it forms after a downtrend, indicates a bullish reversal possibility. The psychology: it shows sellers push the price down, but buyers regain control by the close. How do you use this? You enter long positions after a confirmation candle closes higher than the hammer's high. You set your stop loss below the hammer's low point. Okay. And we're going to get into what a stop loss and all of that stuff is in just a second. We're going to hopefully, I hope y'all, if y'all have it, let me give y'all this. Okay. Give me 1 second. Give me 1 second while I stop sharing this screen. Let me do this real quick. If you have not done so already, go and download the free tools at the store. The link is in the chat. I'm pretty sure all of y'all had downloaded all of this already. But if you have not done so, go and download this information in the chat from the store. The link is in the chat. As I said, I'm going to go through and I'm going to put in the proper PDFs over it. I just didn't get a chance to clean all of that up, but we still going to be using these, and I'll let y'all know when the new one is. But I just want y'all to be able to follow along and read the material on your own outside of this, because you're not going to be able to get this and understand it. You think you're going to come in here, sit down for 2 hours, fold your hands while you're knitting and scrolling on your phone and figure this shit out, then you're not. you I appreciate you being here, but you're wasting your time. If you ever been to school, you know they give you homework for a reason. It's to make you better. So when you come back, you be able to get the knowledge. Right. So you have to take this seriously in that type of way to understand it. It's going to take you to implement the time outside of these 2 hours that we spend on Sunday, and take an hour or two each day to review something that has to do with trading. Eventually, you're going to be using those 2 hours every day to back test the market. But for now, use that hour or two every single day to listen to the book of the month, or review these candlestick patterns, or review the psychology or price action or EMAs or whatever it is that we're going to learn throughout this class. You're going to need to do this daily for at least an hour or two out of the day. And the more you get familiar with it, the easier the market will come to you. Okay. So let me get back into Hold on, where did it go? Give me 1 second. I appreciate y'all being patient with me as I get all of this together. Okay. All right. So, and then you got the inverted hammer, which is basically going to work in the same exact way, right? We have bullish engulfing and bearish engulfing candles, okay? All right. These examples is kind of all right, but I'm gonna put the real examples up here later and go over here. The characteristics of a bullish engulfing candle. In this particular example, I could kind of use this. You see the red candle represents the price going down, right? And this green candle will represent this candle being so much bigger than this previous red candle in front of it, okay? Uh, than this red candle in front of it. When you have a candle that is eating the previous candle like a goddamn shark, like it's like you swimming in the Atlantic Ocean down there in Florida and a shark then came up. That's an engulfing candle, right? The characteristics, there's a small bearish candle, followed by a larger bullish candle that fully engulfs the previous candle's body. The signal indicates strong buying pressure and potential trend reversal from bearish to bullish. The psychology shows a complete shift from sellers to buyers controlling the market. How do we use this? We enter a long position after the bullish candle closing, set the stop loss below the low of the engulfing candle, and more significant when occurring at support levels, right? And we're going to show you the support and resistance as we move forward because that is another confirmation. When you start to see 3 or 4 or 5 things line up in a certain type of way, that increases the probability that you are correct about what you think that the market is going to do, okay? And the bearish engulfing is basically just the opposite. It's a small bullish candle in front of, followed by a larger bearish candle that fully engulfs the candle's body. The signal indicates strong selling pressure and a potential reversal from a bullish to a bearish. The psychology shows complete shift from buyers to sellers controlling the market. How do you use this? You enter a short position after confirmation of the bearish move, set the stop loss above the high in the engulfing candle, more reliable than support and resistance levels. Okay. So when we come into this market here, right? And I still have it on demand. But it'll be easier for me to show you this on a higher time frame. So let's me move to the 30-minute time frame here, okay? And I'm just going to come here with it, right? Let me find a good example. This is a great example of a bearish engulfing candle, right? You see these green candles indicating that the market is going up. And then this big, stupid white bearish candle, twice the size of this green candle, came and just swallowed the whole thing. You could fit 2 of these inside of here. And then what did the market do after that? It continued to go down. Everybody
Um,
see what's going on here?
No, it's not
mm,
showing. It's
Hold on.
showing the presentation.
I hate when they do that. Hold on. I hate when they do that. I'm glad y'all talking to me. I appreciate y'all talking to me. And oh, y'all gonna learn how to talk in this class. All y'all that think y'all don't like to talk, oh, y'all gonna talk. Whether y'all like it or not, y'all go talk in this class. But y'all don't have to talk today. It's okay. So can y'all see the screen here?
Yes.
All right.
Yes.
So the market opened up on this particular day, gave you a big green bullish candle going up, and this very next white candle, twice the size of this green candle, came and ate it up like a shark in the water in the Atlantic Ocean. And what did the market do? It continued to push down. That's how much selling pressure. That's how much power the sellers had. That's what this candle represents in comparison to the previous candle. So you cannot have a bearish or bullish engulfing candle if there is nothing previous for it to engulf, right? So that is a two candle pattern, right? If it was, so let me find another one going the opposite way. And I'm looking at the 30-minute chart because it's usually easier to find them on a higher time frame. Let me get in here. All right. We found a good bullish engulfing that represents what I want to show you. Yeah, that's a straight breakout reversal right here. Right here. This is another example. Market going down, market going down, market going down, market going down. Opening high, closing low, opening high, closing low, and then this one close low and open high. And this candle can eat up this whole candle in one swallow. And that is a bullish engulfing candle. And what did the market do after that? It gave a little rejection like it was not going to go down, but this lets you know, this pattern right here lets you know that it's still going to go up based on what you see here. All right. Everybody understand the bullish engulfing and bearish engulfing candlestick patterns so far?
Yes.
Yes.
Yep.
All right. Okay. So when it comes to these candlesticks, that is the name of the game when it comes to trading. A lot of people are afraid of it. It's nothing to be afraid of. It's just something to understand that this is just how price moves. That's all the candlesticks are representing is how the price moves. And a succession of candlesticks in your favor is what you're looking for when it's time to trade. Okay. So let me reshare this, right? Because I'm going to show y'all in the general sense, right? Let me move this back to 5 minutes, right? In the general sense, you want to trade when the candles are moving completely in your direction, right? This one candle represents 5 minutes of time. In order to get in on this candle, you would have had to have other indications to show you what's going on. But the point of me showing you this is that on this particular candle, if you see that it's going up and it's breaking these levels, and this is clearly a bullish engulfing candle, you could fit 1, 2, 3, 4, 5, 6 of these inside of here. Then this is a good place to get in and take it up. As you see this candle going up and getting bigger, you may want to get in, put your stop loss up under here, and then you'll be able to make money the rest of the day as it keeps on going up. You get in somewhere on this candle right here. Let's just say you get in while it's halfway going up. We'll call it 64.35. You know, this can you only need 20 points. 64.35 to 64.55. Within two candles, you've already hit your target of $1,000, right? So that's the way you gotta kind of look at the market. Am I getting in a position to where it's going to more likely keep on going in the direction that I choose? That is just the bottom line simplicity of what we're doing here. Finding an area to get in where the price is going to continue to go in the direction that we chose. The market is either going to go up or it's going to go down. But we want to get in the areas where it's making a big move up, right? Or a big move down. Okay. So if we're trading this particular market today, we see the gray area is the pre-market area. When the market opened up, the market started to come straight on down. It's crossed certain levels of support and resistance, which we're going to get into that. But this is the type of trade that you want to take. Hold on. This is the type of trade you want to take here. The type of trade where you're getting in at a great spot, able to put your stop loss above or the candle next to it so you know that the price is not necessarily coming down. I mean, coming back to kick you out. So if we're selling the market in this particular day and we get in here, we got this whole range that it ended up coming down to. And this right now is you see where it says 63.62. That ended up being the low of this particular time frame and date that we have on here. And that's why you see this number right here. On the Thinkorswim platform, this is what your high of the day and the low of the day gonna look like. It's just gonna throw it right there on the screen. Right. So this particular move, we'll call it 64.20 down to 63.62. Right. So that's 20. This is like an 80-point move in one morning. In one morning, an 80-point move. All we need is 20 out of it. So that's where the patience come into because when you're sure that it's going in your direction, it's easier to be able to extract your target, right? And be able to reach your target a lot easier. Now, what ends up happening is that every day doesn't look like this. Okay. These candlesticks are going to move. They're going to move based on the psychology of the market, the psychology of the people that's behind each candlestick. Danielle explained this in the Saturday class before, and I love the explanation that there are people behind each one of these candlesticks. So because there are people behind each one of these candlesticks, there's emotions behind each one of these candlesticks. And it's our job as professional traders to eliminate the emotion out of our trades so that we can make better trades and learn how to trade with the flow of the market. So if you was to get in at the top of this level here and ride it down here, that's called getting in with the flow of the market, right? Right next to it is another great trade going back up, right? So if you get in down here, hold on. If you get in down here and take it up the rest of the day, I don't like the way that one came out with me. Now the market is going up. Let me. That's a good move up. I mean, down. And this is a good move up, right? Now, even though it goes up and down and up and down and up and down, overall, this is a great move up all day. And in any one of these areas, depending on where you're trying to, depending on any one of these areas where you want to get in, and that's where the goal is with this particular workshop to teach you where to get in at so that you could be able to catch these moves. We're going to teach you how to put trend lines and all of that stuff on there eventually. But I'm just want to show you that these are the type of moves that's in the market. And this is just based on the candlesticks themselves and how they're moving. And there's a lot more to it. All right. Any questions about what y'all seeing so far? Kizzy, talk to
So,
me. What you like?
hey Fontaine, so where do we put our stop loss mark? And when we get in a train, when we get in the trade in the direction we want to go, where do we put the stop loss point at?
We're gonna get into that. Right
Okay.
now, we just on the candles. When I do the stop loss part of it, I'm gonna break all of that down. We're gonna get to that. I don't know if we necessarily going to get to that today because we're not actually doing any trading. Like I say, this is a slow cross pace class to make sure that you really are retaining the information. It's going to be a lot of review. But with that being said, Kizzy, Come off of
Yes,
mute. Tell me what you think.
yes, sir.
You getting what's going on here? I want to make
Yep,
sure I'm not
taking
moving
notes
too
on it.
fast.
No, you're
Okay.
moving just right. I'm taking notes on everything.
Hmm. Yes, indeed. Did you did you copy that link that's in the chat on for the Candlestick trading Bible?
Yes, I did.
All right. That's part of everybody's homework. Watch that video once or twice this week. It's the dopest video. I've scoured the internet to find the best video that can literally walk you through each candlestick pattern. And that's going to, like I said, all of the tools that I'm going to give you. This is for your own particular uh 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 portfolio of knowledge, your own files that you can go back and continue to review, continue to use as levels of knowledge to knowledge yourself up and become more confident in this trading thing. Okay. So that
Hey,
is
bro.
the
Okay.
homework.
Hey,
Oh,
bro, if
go
you
ahead.
will share the link again. It's someone saying they don't see the link. So maybe they may have joined a little later or just don't see it as they scroll up. So make sure everybody got
All
it.
right. Let me put it in here. I appreciate you. Yes, indeed. So there it is there. Hopefully everybody can see it now for all the new people who came in who probably didn't get the previous chat information. Also, let me do this again while I'm at it. That is also the link to the store so you can download the class syllabus, the pre-market checklist, and all the other free goodies that I have on there. And we go walk through all of those individually. Let me get back to my screen share with the whatchamacallit. Hold on. All right. So um all of these particular candle patterns, once you go through this PDF, you got the Pearson line pattern, uh the morning star and the evening star pattern. These are very, very strong confirmations here on reversals, right? Make sure that you study the morning star, the evening star pattern. Make sure you study the bullish engulfing, the bearish engulfing candle, and make sure you study the hammer and the inverted hammer. All right, this piercing line pattern, two candles, first bearish, second bullish, second candles open below the first candle's low, and the second candle closes above the midpoint of the first candle's body usually appears at the bottom of a downtrend. Okay. This certain some of these patterns are a little bit more difficult to see, but these main ones here, these are the main three I suggest you study. The morning star and evening star, the bullish engulfing and bearish engulfing, the hammer and the inverted hammer. Okay. Let me make sure I got the other ones on here that I want you guys to study. The Morning Star Doji. And all of these are in the Candlestick Bible video as well. Okay. But I wanted to get down here. I wanted to let y'all know those are the main ones that I love to use. Those particular ones that I told y'all to study, those are the main ones I like to use because it's easy to visually see those in the market. A lot of these other candlestick patterns are continuation patterns. What we really want to focus on is reversal patterns because the reversal patterns are where you generally get your biggest move to be able to reach your target. Okay. So How to use candlestick patterns in day trading. You wait for the confirmation. Never trade solely on the pattern itself. I want you guys to remember that. So just because you see a bullish engulfing or a bearish engulfing, just because you see an evening star or a morning star, doesn't mean get your ass in the market. That's just one confirmation out of a few confirmations that you're going to need. Okay. Always wait for the confirmation candle in the expected direction before entering a trade. So don't sit there and say, oh, it looks like it's forming a bullish engulfing candle and get in the trade. Wait until it confirms because they could shoot that price all the way up and pull it all the way back down. And next thing you know, you have a wick and you've gotten stopped out trying to take a candle up before it closes. All right. This significantly reduces false signals and improves your success rate. So wait until the pattern fully forms, right? And as I said, you combine with other indicators. You're going to use the candlestick patterns alongside support and resistance levels, trend lines, your volume analysis, and the other technical indicators like RSI. I'm not going to teach y'all the MACD. I'm going to teach y'all the EMAs. Um, I like the way I'm just editing this live, huh? For higher probability trades. Okay. And that's the goal, to be able to use the different confirmations together, right? It say use stop loss orders. Always set a stop loss order, typically below the low of a bullish pattern or above the high of a bearish pattern to protect your capital from adverse moves. So as I say, when you see a particular pattern break out, we're going to show you exactly where to put your stop loss at. And as I said before, you got to consider the time frames. Patterns on higher time frames, hour or 4 hour or the daily, generally have more reliability than those on the very short time frames. So the 1 minute or the five. So we trade the 5 minute charts, right? But it's imperative that you work from top down and you understand what's going on in the overall market so that you could be able to make better decisions. A bullish engulfing candle on a 1 hour chart holds much more weight than what you might be seeing on a 1 minute chart and this at the same time, right? So my final thoughts, candlestick patterns provide a window into the market psychology, the ongoing battle between buyers and sellers. By mastering these patterns, you will improve both your timing and confidence as a trader. Remember that no pattern works 100%. I will repeat, no pattern works 100% of the time, and they should be used as a part of a comprehensive trading strategy that includes proper risk management. Okay. So you start by practicing spotting these patterns on historical charts and demo accounts before risking real capital. Over time, you will develop an intuitive feel for how these patterns play out in different market conditions, allowing you to make more informed trade decisions. Okay. All right. Anybody got any questions about these candlesticks once again? Mika, how you doing? You ain't talked to me today.
Hey, Theo.
I told you, I'm gonna make y'all talk. You see what's going on here?
Well, I'm listening to what's going on because I'm driving.
Ah, okay. Make sure you do your homework and watch that video that I posted in the chat. What I will do is I will send that to you directly since you're
Hey,
driving.
Kizzy. I got
All
everything
right.
you posted. I downloaded everything.
Okay. I want to make sure that you get that video too. I'll send it to you directly or just text me and say, hey, don't forget to send me that video. And I'll make sure that you get it because this video is really, really important. Right. You say, are you watching the whole video?
Gotcha.
Watch the whole video. But the most important part of that video is actually just maybe it's about an hour, 45-minute video, maybe 2 hours. The most important part of that video is that first hour of it because it really breaks down everything that I was doing in class today to be able to see it, read it, and just have your own library, your own video library and tools library for you to go back and be able to review. That is a review tool so that you could be able to say, wait a minute, what was that candlestick pattern? And then you can go back and then look at it and then see all of them together in one particular thing. This class, you're going to have to study. I'm not going to lie to y'all. I understand we all have jobs. I understand we all got kids and we all got shit to do. However, in order to not have to do all that other shit that you kind of may be dreading to do half of the time, you're going to have to make time to study. You're not going to get better and you're not going to have any type of elevation in your trading success if you're not studying outside of this class. But I'm going to move slow so that the studying can also be within the class, but you're going to have to double up and triple up throughout the week. And that's why I said just if you watch the video twice this week, then you've done your homework. I'm not asking y'all to watch it every single day, but if you could find 4 hours out of the next week to watch the 2 hour video twice, or at the very least, find 2 hours out of the week to watch the first hour twice. That's the minimum amount of homework, to watch the first hour of that video twice. And yes, that's the video I'm referring to in the chat, the Candlestick Bible. Yes, that video. Watch at least the first hour of it twice. Get a better understanding, because the way that it's broken down, it also gives you the history of the candlesticks. Because a lot of the times we get in here, if you don't know a little bit of history about something, sometimes it can kind of prevent you from understanding it fully, right? And so that video, that first hour, it also gives you a little bit of the history on how candlesticks even came to be in the market as a thing to use. And so you have a better, deeper understanding of why we even use the candlesticks as a tool, right? So that's why I say it's important to watch that first hour, because the historical knowledge of what a candlestick is also important. Okay. But with that being said, it's 2:15. Let me hold on. Let me check out what I got going on real quick. Let me see what else I wanted to do with y'all on this first day before we get into some psychology. Okay. All right. All right, here we go. Let me get back to this so y'all can understand what's going on here. Okay. What you are looking at now, can everybody see my screen?
Yeah.
All right. What you are looking at here is the Top Step X platform. Okay. Now, the candlesticks that I was showing you previously in the market, that was on the Think or Swim platform. But I want you guys to know that all of these platforms work in generally the same. So I'm going to just kind of walk you around this visually real quick on what's going on here. Because when you first get your Top Step X account and you open up the charts, it is not going to look like this. You're going to have to take some stuff out, move some stuff around in order to and add things in order to be able to get your chart to look like this, right? So over here to the right, this is where you switch from your practice account to your live account, okay? Right now I'm showing you this on the practice account, okay? Up under here, you have your buy market button and you have your sell market button, right? These are the only two buttons you are generally going to be using when you're buying and selling. However, they do got a bunch of other cool stuff that once you hit buy or sell, you can do things like reverse your position if you're clearly wrong and you see it turning around and you got some profits and then you're trying to get the other profits. It's a dangerous game to play. This reverse position button is a dangerous game to play. I tried to use it a couple times. I really don't like it. And the reason why I really don't like the reverse position button is because you don't know which position they're going to put you in when you push that reverse position button. Okay. So I would rather get out of my trade, wait and see and reconfirm what's going on. Because if I'm reversing position, that means I was probably wrong about direction. And then if I'm hitting reverse position, then that may end up starting a process of revenge trading. Okay, because that's two trades basically in at one time. You're getting out of one and getting into another. And then if they put you in the wrong position on that reverse position, you can end up losing that reverse position trade immediately. So it's imperative that you are very careful about using this reverse position button. And this flatten all button will take you out of all of your trades and orders that you have on. So really the only buttons you really need to be using here is the buy market, the sell market, or the flatten all. Once you are in position up here, there's going to be a button called B/E, which is break even. And that button will not be available to you until when you're in the market and also when your trade is in profit. When your trade is in profit, that break even button will become available. So all you got to do is hit one button and you have a risk-free trade. Up above here, this is the price, right? This is the price for the buyers, for those that are bidding to go buy, and this is the price for the sellers when they're selling. All right. And right here, this is the actual price. The distance in between the bid buy and the ask buy is called the spread. Okay. So you don't want to get caught up in the big spread. Right now the market is closed, so it's only a 0.25 spread, but sometimes that spread can be bigger depending on the volatility of the market. So be careful about the spread between the buy and the sell because that's what they use to get you in on your market, right? You can either do a market buy-in, and that's where they put you in at the next available open spot on that price. So you may think that you're getting in, let's just say you're buying the market, right? And the price is 64.8850. You may hit buy market, but they might not put you in at 64.8850 because there's no more orders for that. But if you want to get in, they may put you in at 64.90. All right, which in that particular case, that's already a point and a half away from where you want it to be, right? So that's $150, right? That fast that you're already out of position. Okay. And so you have to be careful about that. But this is where you're going to buy and sell in this side over here. This particular drop down is your number of contracts. We're only going to be selling one contract, but they allow you to move it up and down. You're going to keep this as one, and that's if you're selling a ES. For the MESs, we're going to have that at 5. For the order type, you're going to keep that as market. If you change it to limit order, you may not be able to get in, right? So that's going back to what I was saying here. If you're trying to get in at 64.8850 and you have it on a limit order, right? You may not be able to get in at that price and you may end up missing your move. We keep it on market so that we are guaranteed to get in. We may not be guaranteed the price where we want. We're going to get somewhere around close to the price that we want, right? But we are guaranteed to get in. And that's why we use market orders instead of limit orders. Up here is the particular ticker that you're using. When you see me on Thinkorswim, you see me put the ES in there. This is Top Step X. It's called the ESU25 on here, right? And you can go through and you can change whichever. We're going to show you how to make all your tickers your favorites so that you could be able to navigate in between each one of the stocks that you like to trade. So right now I have the ES, which is the S&P 500. I have the micro ES. I have the micro NQ, which is the NASDAQ. I have the YM, which is the Dow. I have the regular NQ, that's the big NASDAQ. And then I have the big uh, Dow, which is the YM, right? And so I'm able to navigate through these at will just by the click of a button. So if you're in the morning signals group, she might say, "Hey y'all, we're going to buy the YM." So all I would have to do is come here, hit my drop down, change that to the YM. You know, uh, right now my chart still says ES, but once you change this over here, you're good regardless of what it says over here, this is what you're trading, whatever it says here in this box. It don't matter what charts you got up. If you want your charts to match up with what's going on over here, we're going to show you that. But let me put it back so mine could stay matched up. All right. Inside of here, this is the actual chart. These are the candlesticks that we are trading. All right. Trying to make my screen a little bit bigger on the candlestick so you can see them individually now. This is the 30 minutes, right? Up here, you have the 1 minute chart, the 5 minute. I have a 15 minute here. I have a 30 minute here. I have an hour chart here. All of these are the same candles, just consolidated with candle inside of a candle. Okay. And this is, I can even go to the daily chart, and this drop down is going to show you, you can even break it down to the seconds on Top Step X, which that's insane. I would not want to watch the market moving second by second. That's insanity. But in a general sense, we're going to show you how to set up all of these. We're going to show you the candles. I got the regular candles. I got the Heikin-Ashi candles. We're going to show you how to add your indicators and all of that other cool stuff. Over here on the right, you have the price. On every single platform, your price is to the right. It doesn't matter if you're on TradeAvate. It doesn't matter if you're on Ninja Trader. It doesn't matter if you're on TradingView, Thinkorswim. Regardless of the platform, the price is always on the right. In school, they said this was your y-axis, right? You have the x-axis and the y-axis. Just know that your price is always on the right. Okay. But down here, it's a little bit different. Okay. Down here is the time and date. Right. So this is the time and date on the Top Step X platform. Right. When you change your time frame, that time and date is going to change according to what you're looking at. So now these are going in 30-minute increments at the bottom, 14:30, and these is in military time. So if you need to understand military time, we're going to go through that and how to convert military time to standard US time. Okay. But 1400 is 2 p.m. 1430 is 1500 is 3 p.m. Right. When you go to the 1 minute chart, this is going to move by increments of 1 minute at a time. You go to the 5 minute chart, these are going to move in increments of 5 minute at a time. 15-minute chart, 15 minutes at a time. 1445, 1500, 1515. So you have to know which chart you are on. We're going to teach you how to add all of that cool stuff on there. All right. We're going to show you what all of these little cool stuff over here. This is your drop down menu. On the Thinkorswim platform, you have to right click to pull up this menu. On the Top Step X platform, it's already, I'm going to show you how to have it over here to the side so that if you want to add a trend line, all you got to do is click, click, and then this one has a rotation trend line. I like it. It's so cool. But you take it, boom, you put it there, and that's your trend line. You take it, boom, you delete it. We're going to show you how to navigate all around this. Okay. Over here, they got the Traders Hub, which gives you all of the news and everything that's going on, and you can get involved with this if you like. I'd never even touched this. I don't give a damn what's going on now. Here you're going to have your performance stats. I had got in and out of a trade at one time to show somebody how it worked, so it's minus $15. But this is going to give you all of your stats, your monthly P&L. P&L, this means profit and loss. Okay. If you have a profitable day, your days will turn green. If not, they will be red. It's going to show your weekly trades, how many trades you made, and your profit loss at the end of the week. And it's going to show each individual day that you make a trade, how many trades you made in that day. Trust me, the less trades you make, the more money you usually make. When you start getting out there making a bunch of trades, you usually, this number over here at the end of the week doesn't look good. Okay. Down here is going to be breakdown of every individual trade, the time you got in, which symbol you traded, how many you traded, your exit time, how long the trade took, which this one was a 5-second trade. Like I say, just to show the in and out of it. Your entry price and your exit price. This is important because when you get to journaling your trades, you should have a journal outside of the platform so that you can be able to write things down. When you write things down, it becomes more powerful. Okay. But this is going to be a really important tool so you can understand how you're getting your 20 points, where you're getting your 20 points from, and then you could be able to go back, look at the date, look at the time, and then now you can be able to say, if you got a losing trade, you can ask yourself, why did I get in at a particular price, right? If the trade lost on you, and you could say, go back, look at the date and the time where you entered at, and ask yourself why you got in. That's why this is an important tool here. Okay. Up under there, you have your settings, right? This is the practice account. So they don't have all of the features on here that we're going to show you when you get into your live account. But this is your stop loss here, right? We're going to get into more of your stop loss and all of that later. But this is your stop loss and this is your take profit. I have my stop loss at $300, which means if a candlestick goes in the opposite direction of what I choose, and that price on that candlestick gets to the amount of $300, which is 6 points on the ES, I will automatically lose the trade. They will take the $300. And if I want to trade again, I have to enter another trade based on what I see in the market. Right here is my profit. I got my profit for $1,200, right? Which makes this mathematically a 4-to-1 move, right? And once I hit profit, if I have a $1,200 profit, which is 24 points on the ES, right? What is it? Yeah, 24 points on the ES. Then I will automatically be taking out the trade and they're going to give me my profits. So if it goes the opposite way, I lose 300. If it goes in the right way, I win 1,200. The market is closed right now, so I can't technically show you. Let me see, because I don't think it's not going to allow me to. Will it? You got the buttons on here. Let's see. No, it's not going to. I heard that. Order rejected. So the market closed. It's not even going to let me do it on the practice account. But in the general sense, right, this little mark right here, this green dotted line is where the price is right now. And you see the backslash ES. So that's letting you know that we're trading the ES. Everything is matching up. And the price is at 64.8850, right? When you widen that price out, I'm just using my middle scroll button to widen and lower that price. I'm gonna show y'all how all of that go. You will see that the price is literally lining up to what they said it is, right? 64.8850 is where that green line is. That's the number that you see here, right? And so if the market, right, was back here, right, and it came up and I wanted to sell the market from here, there will be a little tab, just like this ES tab. There's going to be a little tab that comes up and it's going to put the exact price that I'm in on, right? And there's going to be a little dotted line on the price that I got in on. If I'm selling the market, which means that I'm thinking the market is going to go down, there's going to be another red line above that that is going to be literally $300. Where I showed y'all here, this $300 is going to be represented here, and they're going to put another line there. My take profit, which will be 24 points, is going to be somewhere down here, and it's going to show you $1,200. It's going to show you $300, and it's going to show you where you at, right? And then once the market gets to moving, your price is going to move. The line of where your money is at is going to move. You're going to be able to see it. You're going to be able to see up here. This is your P&L profit and loss, right? This is a $150,000 account. This is the current balance of it, right? When you get into a trade, these numbers are going to be moving, right? This is your realized profit and loss. This is the unrealized profit and loss, which means this number is the number you can bank. This number is going to end up going over here. So if you win, this is going to go up. If you lose, it's going to go down. And we're going to show you more of that as well. Okay. So this is in general the Top Step X platform. We're going to show you how all of this stuff works click by click, day by day, as we continue on throughout the class. This is going to be the main tool that you're going to be using to buy and sell in the market. Okay. But once you understand what's going on, you understand how these candlesticks move, then you will be in a better position to follow along in the morning signals group. Okay. And that's really what this is all about. We're going to eventually get everybody's screens set up to be somewhere along looking like this. You may have different candle colors, and maybe a couple of little small things as you decide to customize it in your way. But in general, this is the template. Chart to the left, buy or sell to the right. All right. Anybody have any questions about that?
Nope.
No, we are not setting this up today. It's going to be a process to where when you start setting up your accounts, we're going to do it in class. And then for the people who are still having trouble, you're going to have a one-on-one session with me either later on that week or sometime throughout that, through that process so we can do it individually. Because I understand that a lot of times it's hard to follow along in class, and just because you're watching somebody else's screen get set up, that don't mean that when you go to sit down to do it that you're going to be able to do it on your own. And so the one-on-one sessions that I'm going to provide is going to allow you to be able to follow along in class and then also be able to confirm that you have it set up the right way in the one-on-one and be able to customize it yourself in that at that particular time. Yeah, that's right. It is a second language. It's like learning a new language. Yes, indeed. And it's a beautiful language to learn. It's the best language to learn. Once you start to really get involved, I know a little bit of Spanish, right? And I could fake myself away through a little bit of Spanish. I took Spanish class back in the day. Imagine if I would have kept taking Spanish class, how well-rounded I would be in the realm of being able to speak Spanish fluently. Because I don't speak Spanish fluently, I haven't been using it every day. All I have is hola, ¿cómo estás? ¿Dónde está usted? ¿Cuántos años tienes? I can speak it a little bit, but I can't hear it if somebody else talks it to me. And that's the point of learning this new language, because at the end of this year, you're going to be able to speak the language. Yeah, exactly. Muy bien. Um, and that's really the goal of it. We're getting into the last part of the class, right? Which is the psychology. And I want you guys to know that in the syllabus, there's a book of the month every month. For everybody that was in the Saturday class, you probably already read these books, but that is the point. That's why we continue the classes, and we continue the classes with pretty much the standard set of books. There are some variations here and there depending on how we want to spit it to you, but we add books all the time, and we want you guys to really embrace learning the information that's in these books. All right. And so uh the first book in the syllabus is The Power of Consistency by Weldon Long. And y'all can, I'm not gonna put that in the chat. Y'all can go and look that up on your own in the syllabus. But let me explain to y'all why that is the first book. The reason why that is the first book is because you're not going to get anywhere without consistency. And that goes whether it's the stock market or in life. And so when you ask yourself, what things have you done in your life, the things that you were good at and the things that you finished, it became a process of consistency. Those things in life, like going to school 12 years, graduating from high school or whatever you did, you wouldn't have been able to do that if you weren't consistently going to school. Even if you didn't like school and you had your mama like, get your ass up, boy, get your ass in there, whoop de whoop, 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 whoop. You got the results because even when you didn't want to do it, you still did it. And uh your reward for that consistency is a high school diploma. Your reward for that consistency is the ability to be able to communicate with people better in different areas and aspects: English, math, language arts, science, right? So you have more knowledge. So all of that consistency of going to school ended up bringing out certain value, right? Um, the power of consistency, knowing mentally that you're going to be consistent, is what you need to realize at the beginning of this class. The power of consistency is to remind you that do not quit this. The reason why this class is a year long is because I want you guys to take it one step at a time so that you don't get overwhelmed, so that you don't feel like it's too much. And to be able to be consistent with this for 52 weeks for over a year, you will get results. You will become a better person. You will become a better trader. You know, overall, your life will improve, but it's going to take the aspect of you understanding the psychology that comes with trading, you know? So, The Power of Consistency, the first book. I know that whether you've read the book or not, I just want to hear people's thoughts on what it means to be consistent, right? Anybody have any thoughts on what it means to be consistent? What does consistency mean to you? What is something in your life that you didn't think that you was able to do, and through being consistent you was able to pull it off? Somebody give me a good story. I like to hear stories. Somebody tell me a good story about consistency in their own personal life.
I'll go. I'll go. There's several different examples, but basically consistency is just, it's repetition. It's doing the same thing over and over, regardless of the cost of it. For me, it's running. And so I've never really been a good runner until I joined the army, and they'll make you run. They will make you run. But it was one of those things that once I got out, I said, "Man, I ain't got to do that no more." I ain't got to do that no more, and I'm not about to do anything I don't feel like it. But at the same time, the body itself misses it because it's like, okay, tells weight, all of that other kind of stuff, it's like, okay, what is it that, you need to get back into? And so, it started to be the running again. Luckily for me, because I have remained consistent, it helped me to recognize a health issue that I never would have caught and just would have just been potentially asked out, just somewhere, just in a hospital, not knowing why. But because it was a decline in my workouts, even though I was doing what I needed to do, I was able to go to the doctors and say this, something beyond what I'm doing isn't working. Something's not right. Something's wrong. And with that, they was able to tell me, what's happening. So, uh, it can say it can literally be life saving, is what I would say.
I love it. That is a beautiful story. I'm so happy that you was able to find out what was going on and back in a healthy mind state physically and mentally. And what I take out of that is exactly what you said. If you are not consistent, you will not be able to identify a potential problem or issue. When you're consistent and you have a routine, if something goes awry, you can immediately know. If Tamara wasn't out there running every day or running here and there, she'd have probably said, "Oh, it's just because I ain't been running in a while, and that's why I feel this way," and ignored it. But because she was consistently running, she knew that something was off. But it took that consistency of running to be able to even identify that something may be off, you know? And that's what consistency does for you. That's why in this trading class, you're going to be able to build up your routine. We're going to help you build up your trading routine that you're going to have around your schedule. It's going to be customized to you. You're going to create your trading routine, but we're going to help assist with the tools that help make you better in your trading routine. My trading routine consists of 2 cups of tea. If I'm not drinking 2 cups of tea before I trade, I feel like something is off. Because I'm so used to having my 2 cups of tea before I trade, before I even start looking at the charts. I need to already be on cup number 2. If I'm looking at the charts and I'm still on cup number 1, I feel like something is off. I have to be on my 2nd cup before I even open up the laptop. That's just a part of my routine. 2 cups of tea. And I have other things that's involved in my routine, but that's just an example of if I'm not doing something in my routine, I know something feels off. Anybody else want to make a comment about consistency? I'll tell you this, y'all see me on this video doing this live class workshop with you guys. And I started my YouTube channel uh back in, I want to say like 2019 or 18 or something like that, probably about 6 years or so ago. When I first started my YouTube, my first video was terrible. I ain't had my hair cut. I just sat down and I did the video. The reason why I did that first video is because I was encouraged by a couple of friends like, hey, you're never going to do it if you just don't do it. You can't wait for everything to be perfect to start trying to do something. You have to start. And when I did that first video, I got that monkey off of my back, right? And then from there, I was doing a video every week, just consistent every week. And I did that for probably about 20 or 30 weeks or so. What stopped my consistency is something that in this workshop you're going to understand about when it comes to the psychology is being detoured, well, not necessarily detoured, but it is a detour with the people that's around you. So I ended up getting into a relationship, and a lot of that consistency when it comes to doing the things that I did stopped because I was putting all of my energy in being consistent with something else, consistent with being, trying to be that man for that particular lady at the time. And that's one of the reasons why I am back teaching this class is because that relationship is over and I understand where I was before and I'm getting back into that consistency that I was in before of elevating myself and leveling myself up. And I know what it takes because I was consistent before and now I'm doing it again. And the same way I was doing a video every week when I first started YouTube, now I'm holding a class every week to help level myself up mentally, emotionally, psychologically, financially, emotionally. You know, it's real powerful what consistency can do for you. And that's what you're going to need in this market. You're going to need a consistent Zen mindset. And when I say Zen, I mean peace. You have to be at peace within yourself to be able to navigate this market. You're not going to be able to bring all of those lower vibration emotions into this market because, as we said, behind every candlestick is a person. You are that person behind that candlestick. And if you're emotional, then you're going to be trading every single candlestick, you know? And that's what we want to prevent here is revenge trading and all of that other stuff that comes with not being in the emotional state of mind to trade. And it starts with consistency, setting your own personal rules with inside of the market. All right. Um, the class is scheduled to end at 3. However, I have it set up now to where it go over. My apologize to everybody that was uh in the webinar last night because I didn't know that I had to set up a different Zoom account so I didn't kicked out. And so that's why we got kicked out of the webinar. But we're not going to get kicked out today. And I'm going to sit here for anybody that has any questions to after 3 o'clock. I know it's Kizzy, what'd you say? What time is class on Tuesday and Wednesday? Well, right now it's just a Sunday class. We're going to implement a Tuesday class eventually for a Tuesday evening, and we also will eventually have a Sunday class. But that's going to be way further in the future. We're talking about months from now. Another class isn't going to start until I feel comfortable with you guys being established enough to start navigating your screens and being comfortable enough to see what's going on in the market, and you guys have a little bit of separation from where the next class will start, and then that's when I'll will start a new class. I want to make sure you guys are at least a couple of levels up before I start a new class. And then, of course, once that new class starts, you guys will have access to that new class. So because review is so important. And Danielle will tell you, when I took her class, and then I took her next class, and her next class, and her next class, and her next class. And at one point, I was taking 3, 4 classes in a week because I am in the mindset of consistency. And I know what it takes to be successful. And I knew that I had to study outside of class. And once I learned how to back test the market, I was in there back testing, going back months, going back years, going back. Do this still work in 2020? Damn, it sure do. It worked in 2020, 2021, 2022. That's what back testing is about. Seeing how long your strategy was able to stay in place. And these particular strategies that we develop, they work throughout any market, whether you're trading Bitcoin got candles, they move the same way. Whether you're trading Nvidia, Apple, these candlesticks move in the same way. These strategies work across multiple different stocks, and once you are consistent in knowing these strategies, you can take them and transfer and implement them into anything that you're going to do in the stock market. You don't, when you, and I'm going to show you all this real quick. Okay. I'm going to show you all this real quick before we get out of here. Hold on. Hold on. Let me get this together. It's probably going to be the last thing I show y'all before we get out of here today, as far as the charts and stuff go. Hold on. Where is it? Okay, here it is. Okay. Let me clear all of this out of here. Actually, I didn't even have to. This is what I want to show you guys. All right. This is what I want to show you guys. From A to Z. These are all of the different tools that can be used to trade, all of the different confirmations that can be used to trade, all different type of algorithms and this and lines. And so you will drive yourself mad. You will drive yourself insane. You will drive yourself off of a cliff into your own psychological death if you think that you need to learn every single one of these different indicators. It's impossible and you see what I'm saying? To think that you're going to know all of this. And that's why this is streamlined to give you the indicators that you need that transfers across multiple across anything that you're going to trade going forward. That's why this is important, because somebody's going to come up to you if you don't know anything about trading, so and somebody showed you all of this. This is overwhelming. Can you imagine having to learn all of this? This is for the people that went to Harvard, Yale, MIT, and all of that stuff. The professional traders that were on Wall Street and still are on Wall Street at a certain point. They don't use all of this, but they have to know it in order to get their degree, right? You're not getting a degree here. This is on for your own personal comeuppance and being able to trade and the tools that you actually need to be successful. You don't need to know A to Z, all of these different indicators to be successful. All you need to know is what we're going to teach you moving forward in the class, which is the RSI, the EMAs, the volume, the Heikineshii, the Fibonacci, and it's going to take some time. You're not going to use the Fibonacci as much, but sometimes it's helpful, right? You may not use RSI a lot, but if you understand what the RSI divergence, and down here, this is the RSI on the Thinkorswim. Right here in the middle is the volume on the Thinkorswim. We're going to show you where everything is at, how to put it all on your screen as we move forward in class. Okay. Um, does anybody have any questions?
Yeah,
Just say, Canty, what you got? You go say something?
yeah, my bad. Thought I did. Are you gonna be sending out a copy of this class so we can access it offline?
Yes, this class is being recorded, and I'll probably be sending it sometime tomorrow.
Okay, thank you.
Yep, and all the classes will be recorded, and I will be sending it to y'all within I'll say within 24 to 48 hours. So no later than Tuesday evening, everybody will have the recording.
Cool, thank you.
Yeah. And when it comes to, like I say, the classes moving forward, you guys will also be invited to any new classes that I have going forward, because it's important to have the repetition. This is, once you're in with me, this is lifelong. Unless you just say, fuck that, I'm not being a trader no more, I'm gonna be on your head. I'm gonna be like, where you at? I'm gonna be like, what's going on with you? It's gonna be 9, 10 months from now. It'll be 2, 3 years from now. I'm still gonna be asking, hey, I'm getting in this class, next class. You want to sit in and learn with the new people? That's me. Y'all see Danielle in here? This is what we do. We sit in here. This is how we continue to get better. By continue to take these workshops, continue to take these classes, continuing to start from the beginning and build upon the knowledge we already have. And just the idea of hearing it in a different voice sometimes help you pick things up better. Just the idea of somebody showing you a different PDF or suggesting a different video helps you learn the same things in multiple ways, which strengthens your confidence going forward. And that's a part of the consistency, because the more consistency you have, the more confident you become. And the more confident you become, the easier it is to trade, the easier it is to not revenge trade, the easier it is to be able to set it and forget it, the easier it is to be able to read the market. And all of this takes time. This is definitely a completely foreign language, you know? And I appreciate you guys taking this journey with me. This class is for y'all, but this class is for me. This is the way for me to double down on my consistency. The same way I was telling y'all about me starting the YouTube. Next thing you know, you look up, I got mics, I got, different backgrounds. I got a whole green screen up in here where I could change it to anything I want to. Y'all probably can see me on live looking like I'm in New York City in one of the high rises. Nope, I'm right down here in my goddamn basement, just chilling with my whole studio that I built, with my vision. And all of these cool things you can all do for yourself in whatever way possible that you want to be successful in. It's possible. You just have to start from somewhere. I started with goddamn Samsung Galaxy S8 recording myself. That's what I started with. On probation with 2 DUIs. That's what I started with at that time. And I made a decision that I was going to change my life. And I'm continuing to do that. And this is just another double down on being able to take it to the next level of me taking control of my life, right? And so that's what consistency is about. We go get into next week. We go get into some Kobe Bryant interviews. Because one thing about consistency is, in order to really understand what that's all about, you have to study people who have been consistent in different type of ways. And there's a reason why most people who played in the NBA say that Kobe Bryant is the second greatest player to ever play. Number one being Michael Jordan. They don't even think about putting in LeBron in the conversation. People who really know and played that game of basketball. So the media and everybody else will say, oh, LeBron been consistent for over 20 years and he's the greatest. But we're talking about a different mentality. We're not talking about actually playing that game for 20 years and being consistency in that way, because yeah, LeBron is the best over that. But there's a coined phrase called the Mamba mentality. Kobe Bryant called himself the Black Mamba, and he instituted what they call the Mamba mentality. And we're going to dive deep into what that mentality is, because you are going to need it in this market. I guarantee you. We all gonna take a little bit of a piece of the late great Kobe Bryant, and we're gonna apply it here in this market. I'm gonna show y'all what I mean. We're gonna watch some Kobe interviews next week. But with that being said, do anybody want to stay over past this 3 o'clock? If not, we're gonna go ahead and shut down this first class for the day and look forward to having a great trading week and seeing y'all next week. How does everybody feeling? Everybody let me know if they feeling great. Put it in the chat if you don't want to say it out loud. Let me know you're feeling great leaving this class.
I'm
Oh
feeling
yeah,
great.
great.
Feeling great.
Feeling great. Thank you so much,
Great job,
Fontaine.
Yeah,
Fontaine. Great job today,
Excellent.
man.
no, I
Excellent word.
appreciate it.
Excellent word. Looking forward to next week. Talk
Yes,
soon.
indeed.
Thank you.
All right,
Good night.
y'all. Everybody have a great, beautiful rest of y'all Sunday afternoon. Um, and I will see y'all next week on Sunday. For those that's going to be in the signals group in the morning, I'll see y'all in the morning.
All right.
See y'all in the
Talk
morning.
soon. Bye bye.
Looking forward to it. Thank you.